Let's start with the Turkish lira. What an extraordinary day for it. Today itself down 16% as we approach the close. Off the lows, it was down over 20% at one point. Week to date down 26%, year to date down nearly 70%. Extraordinary stuff. What's that done to markets? Well, it's weighed on European banks, some of them down around about 4%. That in turn has weighed on US banks. Most of the big US banks down about 2%. All in all, what does this mean for the broader US equity indices? They are down today, but they're off the lows. The Dow is down over 1% about half an hour ago. It's down less than 1% now, 0.8%. There you have it. The S&P down 0.7%. And I just want to make one point. We're focusing on the US banks here declining because of Turkey, the risk of contagion, so on and so forth. But also remember what the 10-year yield has done. Risk-off sentiment, buying of the bond, yields down, and the banks are reacting as much just to that arbitrary move in yields as they are to any actual fear of contagion. But nonetheless, certainly Turkey has sparked the declines today, bringing in Seema Mody as well. Seema, declines for the day, not necessarily for the week as a whole.
Absolutely. I think what's interesting is that the Turkey situation has been a big concern for Turkey for many months, but suddenly U.S. markets waking up to Turkey's financial situation. You look at the TUR, the Turkey ETF, down 40% today. Its worst day on record. There's an emergency meeting that's in the reports right now that is being held by Turkish banks tomorrow. The big question is, how will Turkey respond? The central bank can raise rates, the IMF could step in, or like China, as you know, they could implement capital control. So a lot of focus will be on how things pan out over the weekend and on Monday, plus two pieces of economic data, China retail sales and industrial production. That's something to keep an eye on. Plus retail earnings. We have Walmart next week, Wilfred.